Welcome to TradeTheNBA.com. This is John. This report is for the 30th of May, and well, we had a nice little move the other day. Wasn't anything too dramatic. It was a little over 1% move lower. We'd been seeing the declining shakeout building from this area. We'd had the magenta right back here, which indicated the first levels of a breakdown in, basically just buying. For the most part, we've been seeing long-term and short-term, midterm buyers fading, as well as short-term, just kind of bouncing back and forth. It kind of faded a bit stronger the other day. We dipped below the red line, which is an indication that there was a little bit more algo activity to the selling side. And we're starting off the day a bit positive here in the pre-market. It's early, but we're right along, and you can see we came right to the 61% line. We closed above it right here on Tuesday. It was at 85, and we closed at 92. And you can see that in the pre-market, we were right at it for the lows, and came right back up off that. So that's right now, at this particular point, providing support, though really not a whole lot to suggest that it will hold at this particular point. So it's going to take some serious activity for buyers to really keep things from decaying further, because this is just the start of it from a daily standpoint. Now, you can look at the NASDAQ. We don't have the same level of distribution, so there's some support there that should assist the S&P. Now, here we go to Euro. This is, you want to say it's surprising, but I mean, we've had this line down here at this mid 115 range for quite some time, simply because we knew that the move above it was outside the normalized range, and this was during the Fed wanting to pump to support the U.S. market. And then we noticed that began to fade back over here in February, and that when it really looked like things were turning around in the U.S. markets and beginning to grow as far as economic growth, and that meant that the Fed didn't need to support the European side of the equation. And then you threw in the contagion from the Italian situation that's going on right now, which is just opening up the clear systemic problems that are built into the EU setup at this particular point. And that is going to create a much broader problem in general for the EU. It's not too big an impact, at least from the S&P standpoint. It's going to shave off some of the premium that Euro exchange is given to U.S. companies. But at the end of the day, it really comes down to U.S. economic growth. When we look at TLT here, we're getting an indication that they're planning to believe in the market that, obviously it's a flight to quality, and that a lot of people pulling your money out. Where are you going to put it? You're going to put it in treasuries. There's been an abnormal increase in TLT at this particular point. This is way outside. It's suggesting recession almost, crazy as that is. The faded oil prices just puts further reduction in inflation fears, though all you've done is just retraced, not quite all the positive extremes. We go back to this one that was right here. These had already been filled. The next level right there is the lows at 1325 here, which we briefly touched just almost to a 33, so it's just slightly above it. Came very close to filling that one. And that's just going to give a little bit more breathing room to the economy, because you're not sucking away all that money for oil purchase, but this is not going to show up for several more months. So the difficulties that may be experienced in the early summer are really systemic from that original buildup going back before. And that certainly isn't going to be positive for gold, because it doesn't create the pent-up inflationary pressures yet. Though we are starting to see some increases in wages, and that would be reflected much more broadly in gold prices going down the road, but also in cryptocurrency. Because again, we talked about that. This also becomes an alternative now to the gold trade. We can see that we had this nice systemic low, and then we talked about this where the green moving above the cyan ends the overall short that took place right over here. And sure enough, then we got a pop, which obviously the cyan moving below red indicates that as well. And that ended that next phase of it. So while it had been in a significant downturn. It was certainly enough of a change there from that negative shakeout back to a positive. We turn to the 5K. It's kind of exciting day. I'm going to slide this over here and we'll enlarge it a little bit so it's easier to see. But this was going in from the Memorial Day trade that happened in Europe, where we had this bounce. And while we were still within a modest short setup in the sense that we hadn't reset with the steel that I talked about, we ended up with the green crossing on the little breakout. But there's little dots, and I'm not sure if I'll have it ready for this coming month's indicators, because I want to smooth those out so that there are fewer of them. But really, pretty much it was indicating that we were completely overbought within this. Well, it's rough to say overbought. It's just that we had a significant algo activity that was going to lead to a retrace of those values, given the appropriate sell configuration, which in this particular case happened very quick with the DOC spread that took place literally right after it. I took advantage of attacking into those highs, given the fact that we were seeing an immediate retrace of short-term buyers in that. And we talked about this one before, where the green is above orange and creates that initial spread, and then you just look for cyan to move above zero. And that usually is the catalyst to do it. And so even at the start of that bar, which is also at the 27.27 range, which goes back to the previous one over here on the edge of the chart that did the exact same thing. So it was a confluence of ranges, so to speak, and it left some pretty decent retraces, because even after having made the new lows and retested the weight on this, oftentimes after that big run up to the 100% from there, you end up retracing back to that, and we'll see that play out again as we see the start of the day. Well, of course, we ended up with beautiful DOC spread here at the break of the 50, and that's where you see that big D, and that led to much broader short move. And again, there's that steel well above, and we ended up with the green crossing right about there, which is right at the 50% in gold. But we got the gold before we were even at the 50%, which just indicated that we were going to come back to the lows at some point. It didn't take all that long. And here's the white candles, and this is what we talked about those before. When that happens, usually you're expecting, well, at least that not only to fill, but usually you expect to come to the lows and at least retrace them. It happens rather frequently. I think in the last several years of just the ES 5K here, it's well over 80% success rate on that, and even the ones that rise, it could go maybe an extended period of a week or two, but they still fill. Normally it happens usually within a day or two maximum. Now in this particular case, it did it fairly short order. We ended up with another one of these beautiful spreads. They happen quite frequently. The key is just looking for that red failure that begins on them, where the cyan makes that sharp move. In this particular case, you had the cyan rising above zero, you had the green crossing below it, so that opens up like that alien mouth we talked about, and then the snake version, which is the orange above steel with the cyan being the tongue, and that was another beautiful one. So in consecutive bars, you ended up with both signals, and that was pretty much it. And it tripped across sideways for a little while, but then started the breakdown. And then this is what's beautiful about the white candle setup is, even in the middle of this downtrend, a lot of times it's difficult to know when to be able to go ahead and add into a short, or whether you should take gains on the new lows. And in this particular case, the white candle said, no, I can short in the middle of a downturn. At this point, they were already down 20-some points, and it just continued from there to make the new lows. We ended up with the blue candle, suggesting a nice little pop from there. It was a nice rise and a shakeout. But again, you're going to be coming back to those lows, particularly a failure below the 50%. When that gold candle came in below the 50, we didn't even pop the 50 there. It was easy to call for that short coming back. Things started to improve quite a bit from a shakeout standpoint. We stayed well above the negative 13, even in the decaying. So that was an indication that there was plenty of accumulation going on in that. We talked about this as we were coming across here. It was looking from the broader standpoint to be a little bit more of a long, but that was back over here. We were still making new lows. In fact, it dipped down, made new low, came down again. And at that particular point, I said, hey, once the shakeout turns positive, then we'll get enough of a bounce. And that can take us well over the 100%, because as I said, when it coils like this, we went from a huge range of, 43 down to 17 as it came across here. And sure enough, cyan under red, always long. And boom, we took off, and that's where it's continued. So you can see how that short cut off right about the same time that it went positive shakeout. And yes, there's been a lot of extreme algo activity all the way from the beginning of this low right here down to 81, which coincidentally you have the white candle from up here, which is slightly higher at the 88 range. And those ranges will get filled back in again. So this pre-market has all been well over the top here. So as soon as a DOC spread, whether it happens pre-market or not, some of this is most likely just some short covering coming back up to the lows from earlier, back over here, which is pretty much where we're at right now. So built-in daily weakness doesn't mean there still aren't both long and short plays within an intraday. It's just nice to be able to see the broader view within a short-term chart, and I think that's an exciting element. If possible, I will go ahead and supply this paint bar that has these candles in it, because basically what this one is doing is suggesting red at below 50% lines and green above, but it also includes the gold candles and these little buy setups. There's a secondary aspect of the shorts that will develop within the upper ranges that will start to turn it from a light red, and then of course when you're below the 23 it goes to dark red. And it's funny because then we have the regular green, which is the light color, which is above 50% but below the 76, and then you have dark green above 76. So it's like your big bull and your big shorts are the really dark colors. It just gives added an enhancement to the visual of it. So all good stuff, and we'll be getting indicators out tomorrow so that you'll be all set for the beginning of June. And I think we're going to have another exciting month. This one kind of trades sideways for quite a bit, but intraday action was still pretty good overall. I think that this previous day just added a little bit more to the volatility mix, which I think just makes a little more excitement compared to the kind of soft ranges that we were dealing with. It was always exciting to me. Anyway, that's where we're at for now, and I think at this particular point you can expect that probably going to be coming back to some of these midpoint levels, whether it's in pre-market or at the start of the open, just something to be aware of, and we'll have to evaluate at that point where things are at shakeout-wise, and then to see if there'll be a bounce back or if this is going to continue immediately back to these low levels down here in the 75 range. So we'll see how much resistance there is right at the 2700. We'll go from there. As always, though, trade well, and we'll talk again later.